Welcome to The Explainer. Today we're putting on our investor hats for a deep dive due diligence teardown of one of the absolute hottest projects in crypto right now, ONDO Finance. We're looking at this strictly from an allocator's perspective, right? We're going to dig into the fundamentals, track the macro momentum of the real-world asset or RWA megatrend, and honestly, we're going to ask the hard questions about where the real value actually lies. Here is our roadmap for this breakdown. First, the real-world asset boom. 2. Meet ONDO Finance. 3. The ONDO product suite. 4. Evaluating the ONDO token. And finally, number 5. The regulatory road ahead. Okay, let's dive right into this. Section 1. The real-world asset boom. Look, you really can't understand ONDO without grasping the massive macro momentum that's currently pulling traditional institutional capital straight into the crypto ecosystem. Just take a look at the steep upward trajectory on this chart from a recent K33 research report. This tracks net deposits into BlackRock's new tokenized asset fund, known as BWILD. Honestly, this instantly validates the entire RWA narrative for any skeptical investor out there. We aren't just talking about crypto-native retail traders anymore. We are talking about the largest asset manager on the planet actively flowing traditional money onto the Ethereum blockchain. It's a real game changer. To put that into perspective, that number represents $300 million in deployed capital. And get this, they pulled in the first $100 million of that incredibly fast. The sheer scale of BlackRock's Ethereum deployment is undeniable proof that tokenizing financial assets, it's not just a passing crypto fad. It is a fundamental upgrade to global financial plumbing. As K33 Research so perfectly summarized in their Navigating Narratives report, bullish market flow trumps all. I mean, they hit the nail on the head. The real-world asset sector is already sitting at a massive $7.5 billion market cap. And with Bitcoin spot ETFs now reality, traditional finance and crypto are becoming, well, deeply intertwined. This is exactly the high-energy, market-driven environment that ONDO Finance is operating in. All right, let's move on to Section 2, Meet ONDO Finance. So with that macro backdrop in place, let's shift to our micro fundamental analysis and meet the actual market leader in tokenized public securities. So the crucial point is understanding exactly what category ONDO fits into. They are the main drivers behind this concept called CDFI, centralized decentralized finance. It's literally bridging two completely different worlds. They're taking the reliability, the compliance, and the investor protections of traditional finance and merging the whole shebang with the speed, efficiency, and global reach of blockchain tech. Structurally speaking, ONDO has built a fascinating moat by splitting its business into two main arms. First, you have the asset management side that creates and oversees the tokenized financial products. You can kind of think of this as your traditional fund manager. Second, there's a technology arm. This side is focused purely on developing decentralized finance protocols, like Flux Finance, which actually support and enhance the utility of those tokenized assets once they're on-chain. Moving right along to Section 3, the ONDO product suite. And this brilliantly illustrates what you, as an investor, are actually buying. Looking at their product suite, notice how OUSG and OMMF caters strictly to global qualified purchasers. OUSG is backed by short-term US Treasuries and accumulates yield, while OMMF is backed by government money market funds and rebases to keep its price pegged at exactly $1. But the real standout here, that's USDY. It's backed by treasuries and bank deposits, and uniquely, it's available to everyone, well, strictly non-US investors, that is, combining stablecoin accessibility with actual dollar-denominated yield. But hey, it doesn't just stop at treasuries. We absolutely have to highlight ONDO Global Markets, or OGM. According to ONDO's recent filings, this is the largest platform tokenizing publicly traded securities today. They're offering tokenized notes secured by over 100 US stocks and ETFs. And crucially, these are backed by actual real-world securities held securely in the Depository Trust Company, or DTC. This is a massive pillar of their suite, literally connecting global investors to highly liquid US equities. Which brings us to Section 4, evaluating the OND token. All right, let's pivot strictly to the asset itself. Because as an allocator, you might be looking at this suite of awesome products and wondering, okay, how do I actually invest in the company's growth? Does the native ONDO token represent a sound investment, or is it just a mechanism for protocol governance? Now, what's really interesting about this slide is the tokenomics breakdown from K33 Research. Pay close attention to that utility line item. While ONDO Finance is delivering exactly what it promises as a protocol, the native ONDO token itself is, right now, used mostly just for governance. Let's look at the hard facts here. There is a massive 10 billion total supply, with only about 18% currently circulating in the wild. Its stated utility is governance only. That means value accrual right now is driven purely by speculation and narrative momentum. Furthermore, as an investor, you absolutely must be aware of token unlocks. Tokens continue to be released into the market, with key batches, like the 1.66 million ONDO unlocking on May 18th, that actively dilute the supply. You've got to keep an eye on that. Which brings us to a bit of crypto lore. There is a very popular meme floating around the RWA sector right now: one ONDO equals one condo. It's this playful idea that the price is going to skyrocket enough to buy you a luxury condominium. And to be fair, early investors who got 25% of their allocation at creation, they're already up over 20x. But allocators need to balance this meme magic against the sober reality of market capitalization ceilings. A fully diluted valuation, or FDV, at those meme prices would literally rival peak 2021 market mania. Finally, let's look at Section 5, the regulatory road ahead. Let's move to and see how this builds into the macro risks, because assessing risk means looking closely at regulatory hurdles, which is arguably the biggest challenge for any CDFI protocol. In a recent letter to the SEC, ONDO CEO outlined 3 potential models currently being debated for tokenizing securities in the US. 1. Direct registration with the issuer's transfer agent. 2. Tokenized beneficial ownership interests tracked right through the DTC. And 3. New digital native securities linked to entitlements held through the DTC. ONDO makes the argument that we shouldn't have to choose just one. They believe all 3 pathways should absolutely be supported. And honestly, here's where the real friction lies. The legacy US system relies heavily on, well, let's face it, slow, centralized intermediaries like the DTC, holding the official records. ONDO's blockchain vision, on the other hand, pushes for direct investor ownership on fast, public, permissionless ledgers. So ONDO is actively petitioning the SEC to support targeted reforms that ensure fair access to these new tokenized forms, rather than just forcing them strictly into those old, intermediated structures. To quote ONDO's SEC letter directly, "The belief that financial institutions are strictly necessary for security and privacy objectives to be achieved is outdated." They're taking a very strong stance here. They're saying that while traditional finance definitely has its strengths, tokenization shouldn't be bottlenecked by legacy banking infrastructure if we truly want to build a more accessible financial system. Thanks so much for joining me on this explainer. And hey, keep doing your due diligence, because with major institutions pouring hundreds of millions of dollars into these tokenized assets, the actual plumbing of global finance is being actively rewritten by protocols like ONDO right before our eyes. Whether you choose to allocate to traditional equities, dabble in CDFI yield products, or speculate on governance tokens, understanding this RWA megatrend, it's no longer optional. So, the ultimate question remains: is your portfolio ready for the on-chain revolution?